We think we have another rate hike coming in September, but let's look forward into 2024. We think across developed markets we're going to be in an easing cycle in 2024. Right now I already think soft landing in the US, and the US has been very resilient, but our base case is still that there will be recession appearing in the US in 2024 and across developed Euro and UK. So at that point you're going to see that rates have peaked, and we can see that the institutional money now we got very a big increase in RFPs, that's request for proposals within the fixed income franchise. That's because the institutional money is starting to position and anticipate peak rates. So we know that when you've just heard the Andrew Bailey talk, you know that there's been an increase and there's likely to be another one, but you've really got to think about what's going to happen. As we head into winter, we've seen within our advisor business the combined impact of higher interest rates and inflation has meant that our clients have been drawing down pensions, not all only for themselves but often to help their families and their kids. So in that context it's right to tackle inflation. We've got to bring inflation down because it's eroding value, and we believe that we're getting close to the point in which monetary policy will have done its thing. We're seeing leading indicators of it already in flows, and you've got to anticipate what's going to happen in 2024. I mentioned DM already, there's too much negativity on M. Is a very crowded trade. We think that it's overdone. We're seeing easing cycles already. We've seen easing cycle in Brazil, and you're seeing markets respond. We know that China is easing for good reason. We think that it is oversold, and we do believe that still we will see the pattern of the world moving east as we see the correction in developed markets. Just stepping away from the macro for a moment, if I could just squeeze in a quick question on the dividend before we let you go, because it's been described as eye-catching in the past. The dividend 7.3 pensia covered 1.04 times by just a capital generation of £142 million. The market is also wondering how sustainable this eye-catching dividend is. What's the outlook on this payout to shareholders? Well, the board has confirmed the dividend for the first half, and importantly we covered the dividend with adjusted capital generation. The strength of Abrdn. What we've been doing is building a stronger business model, and the entire purpose of that is to be able to earn through cycle, to generate revenue and earnings growth through cycle, because the dividend is important. Remember the history of this company. We have 1 million shareholders that we're part of the company. When it was mutual, there's evidence dividend is important to them. We respect that, and we are committed to delivering that. That's why we've reconfigured the business. You don't sit still. We've reformed from what was a traditional life and pensions business, and we have 3 businesses: and investments, advisor, and personal business. The advisor and personal businesses are technology businesses. These are businesses that are thriving and can thrive in the 21st century. So our model, we think that the model is unique. Essentially, what is the model? ISNT investing and a platform business. We create great products, and we've got direct distribution. That's very important, and the dividend was covered in the first half. That's important, and not only did then, but we rewarded shareholders with a buyback as well, and this morning we've confirmed that we've upsized that to 300 million. Thank you for watching. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to our channel for more from the NewsQueue.